today's Quickfire Friday, I'm tackling a hot topic in the real estate world: buying a house when interest rates are high. Is it a smart move or a risky venture? Stick around as I break down the pros and cons. Understanding interest rates. Let's start by understanding interest rates. When rates are high, borrowing money becomes more expensive. This means your mortgage repayments will be higher, potentially impacting your monthly budget. Also, accessing money for a home loan becomes a lot harder in a high interest rate environment because banks will assess your borrowing capacity at a higher rate. So say you are applying for a home loan and the current interest rate is 6% like it is now. The bank will assess whether you can afford repayments that are 8 to 9%. So trying to get a home loan may be harder, but buying a house in this type of environment may be easier because of this reason. And not as many people can afford to buy a house, which gives you a better opportunity to buy at a discount. The pros of buying in a high interest rate environment. Believe it or not, there are some pros to buying a house when interest rates are high. Firstly, sellers might be more willing to negotiate on the price. You could find yourself getting a great deal on the property itself. And the property environment might be a bit easier to purchase as there might not be as many buyers. Long-term investment perspective. From a long-term investment perspective, buying during high interest periods could still work in your favor. Real estate historically appreciates over time, so even if you start with a higher rate, the property value could rise, offsetting the initial cost. Locking in fixed rates. One strategy to consider is locking in a fixed rate mortgage when the time is right for you. While your initial payments might be higher, you'll be protected from future rate hikes, but be very careful as this is what a lot of people have done in COVID here in Australia and now face the reality of coming off a 2 to 3% interest rate into a now 6% rate environment. So being prepared and understanding that here in Australia we can only fix rates for a couple of years, so making sure you have the professionals guiding you to make an informed decision is very important. But doing this can provide stability and peace of mind over those years. The cons of buying in high interest environments. Now let's explore the cons. High interest rates mean higher monthly payments, which could limit your housing options or strain your budget. You might also end up paying significantly more in interest over the life of the loan. Opportunity costs. Consider the opportunity costs. Money spent on higher mortgage payments could have been invested elsewhere, potentially earning you more returns. It's crucial to evaluate whether buying now aligns with your financial goals. Market uncertainty. Another factor to weigh in is market uncertainty. High interest environments might coincide with economic volatility. If the market takes a dip, your property's value could be affected. Mitigating risks. If you're leaning towards buying during high interest periods, here are some tips to mitigate risks. Talk to a good mortgage broker to secure a better rate, save for a larger down payment, and shop around for lenders to find the best deal. Consulting professionals. Before making a decision, consult with professionals. A financial advisor, mortgage broker, and a buyer's agent can provide valuable insights based on your individual circumstances. So, is it good or bad to buy a house when interest rates are high? The answer isn't black and white. It depends on your unique situation, risk tolerance, and long-term goals. Make sure to weigh the pros and cons. Do your research and remember, the right decision is the one that aligns with your financial well-being. Thanks for watching, and I'll see you on the next one. Peace.